Tesla may have just hit a major iceberg and it's uncertain what the consequences might be. Today we're embarking on a deep and detailed exploration into the global supply chains with a spotlight on the unfolding crisis affecting companies like Tesla and Volvo. Tesla recently made a huge announcement at its Berlin gigafactory and investors are quite concerned. But should they be? Is there really a cause for alarm, or is this just the mainstream media blowing things up out of proportion? Today we're going to dive into the root causes, examining the intermediate impacts and the immediate impacts as well, and pondering the far-reaching implications of this recent event for the global automotive industry, as well as what it could possibly mean for Tesla stock. It's a complex web of challenges and strategies, and we're here to help untangle it with you. So stay with us as we bring you all these details from these critical stories, and don't forget to grab your popcorn while you're at it. Let's dive in.
We have a great segment coming up later in the program. The next stock is an interesting one, which is Tesla. There is a lot of Tesla news out there. We will cover all of it in the program. The first piece being that they have cut prices again on models in China. We will bring you those details. But the bigger news probably was the halt to production in Berlin because of supply chain impact from the Red Sea situation. How does that look? We will go to our global cars editor in the next block, but Tesla is down significantly. Volvo, the European car maker, also following with similar news, halting European production because of the impact of what's happening in the Red Sea. We've got a brilliant name coming to us now, Ryan Peterson, the CEO of Flexport, a leader in global supply chain technology. And Ryan, you've been coming on with us in recent weeks because you're keeping a micro track of the impact of what's playing out in the Red Sea. The latest from Flexport's perspective, please.
Sorry to interrupt, but just before we hear from the expert, we'd like to discuss a new trading platform we've started using called Kalshi. Don't skip this part of the video because it is Tesla related, but not in the way you think it might be. Now, I know you may have your own platform for buying Tesla shares, and you should keep using it. Kalshi, though, introduces a novel trading strategy focused on event outcomes rather than stocks. This platform offers you the chance to earn simply by leveraging your prediction skills. With Kalshi, you can speculate on the likelihood of specific events. For instance, you might trade based on the number of cars Tesla delivers this quarter, or even if Apple will unveil a car this year. Furthermore, the platform isn't limited to tech or automotive events. You can also bet on cultural happenings like the Grammys or Oscars, as well as economic indicators such as inflation or interest rates. Kalshi is a CFTC-regulated exchange that enables trading based on event outcomes. So what are you waiting for? If you're a US citizen or resident, you can sign up using the link below, kalshi.com/Tesla TMRW, or start trading on Tesla deliveries this quarter and other unique markets. You can also download their mobile app to trade on the go. So let's carry on. Tesla and Volvo recently dropped a bombshell announcement that has been setting the industry ablaze. The car companies, both renowned for their innovation and market presence, have hit a major roadblock, pausing some of their European production. This isn't just a bump in the road, it's a direct consequence of a critical supply shortage. A shortage emanating from disruptions in vital shipping lanes like the Red Sea and the Suez Canal, intertwined with global politics. This scenario puts the spotlight on the often overlooked yet crucial fragility of the global market and supply chains, and Tesla may have just hit one of those major roadblocks again. Hey guys, welcome back to Tesla Tomorrow. To grasp the severity of this issue, let's consider the pivotal role that these shipping lanes play. First up, and definitely most important, is that they are arteries of the global trade system, connecting continents and economies. When these shipping lanes suffer, the impact is not localized, it's global, and industries across the world feel the tremors, with ripples affecting everything from product availability to pricing structures. Before we carry on though, if you're liking this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. The immediate sparks for this supply chain crisis was an unprecedented and unexpected attack on the container ship Gal Ultra Eagle in the Red Sea. Orchestrated by militants, this event exacerbated tensions and led to a supply chain issue with a chain reaction of rerouted ships and strategic reassessments by global companies. Yet this is just a fragment of a much larger picture. The consequences of this event are extensive and multifaceted. For one, we're witnessing delays in shipments, a disturbing shortage of shipping containers, and soaring ocean freight costs. These are not just logistical nightmares though, they could escalate into more significant challenges for the timely delivery of critical automotive components. And now let's look at Tesla.
In 2020, I was trying to work out what the story with Tesla was. and a Tesla executive messaged me and said, get in your car, drive from San Francisco to Oakland, and on your way on the Bay Bridge, look right out of your window and tell me what you see. And he was referring to all of the ships parked, waiting to unload. That was the issue, right, of the 2020-21 crisis. What is different this time? And I ask you to have a crystal ball. How long will it take to unwind relative to the months and months of that previous saga?
Yeah, well, they're really quite different because the 2020-21 crunch was really driven by an increase in demand. We shipped more containers than ever. There was a 20% increase in containers arriving in the United States because customers weren't able to spend money on travel, on restaurants, on services. They were shifting that consumption to goods. And so we had so much more demand that the ports couldn't keep up. And so then the ports became congested, and that resulted in a decrease in capacity. So it was really a double whammy in 2020 and 2021. What you're looking at now is just a reduction in supply. There's no corresponding increase in demand. So it's different in that regard, and it's less of a traffic jam than it is a detour. And that detour runs at the same speed, it just takes longer. So I think the world will adapt better than it did in 2020 and 2021. Not to say it's not a big impact, and certainly short term, it's a pretty big deal. Talking crystal ball, well, the ocean container shipping industry ordered a lot of ships. In the peak of all those high shipping prices of 2020 through 2022, the carriers made a lot of money and they reinvested in their fleets. And those ships are coming online this year and next year and even into the year after that. And so you have a lot of capacity coming online that will, although we have a decrease in capacity resulting from this rerouting, if you're taking long-term view or even medium-term view, you're going to see that made up for by new ships. So I can't predict how long this will last, but even if it lasts a long time, I think you'll see the ocean market kind of stabilize and get to a relatively normal pricing environment versus long-term historical averages. Of course, it'll be higher than it was going to be if this hadn't happened, but I think the world will recover.
Tesla's state-of-the-art Giga Berlin recently has been under fire for facing potential setbacks. One may argue that Tesla's strategic and proactive supply chain management, including secure shipment contracts and a highly efficient production model, may provide some resilience against these headwinds. But the question remains, is it sufficient to counterbalance the disruption? Just maybe Tesla's Shanghai facility, with its more considerable production capacity, might also be able to offset some of Berlin's shortfall. This is one aspect where Tesla deserves to be applauded. The difference in production across all of Tesla's facilities highlights a key strategy in today's manufacturing landscape, which is the importance of geographical diversification. It's a strategic maneuver, essential for mitigating risks associated with regional disruptions. But while it may seem that Tesla has it all figured out, let's remember to widen our lens. The narrative extends beyond just Tesla or even Volvo. The automotive industry at large is experiencing similar strains. Parts delays and escalating manufacturing costs are becoming rampant, and this is not just confined to the auto sector. Various industries worldwide are dependent on these shipping routes and are also feeling the strain. And that brings us to a pivotal moment in manufacturing when it comes to modern-day world activities. And that is the rising importance of localized supply chains. Having suppliers closer to production sites is a strategic defense against global disruption. While it's a complex process, it's also important, particularly for the intricate products like automobiles. Supply chain issues like this are the reason why companies are formulating strategies both for the intermediate and distant future. These short-term tactics include diversifying shipping methods and tweaking production schedules, and looking ahead, the focus shifts towards constructing remedies and redundancies in supply chains to secure a broader base of component suppliers and then broadening the geographical spread of manufacturing facilities. At the moment, financial markets are observing with keen interest because the manner in which Tesla and other automotive manufacturers are navigating these supply chain upheavals is a crucial thing to observe for sustaining production momentum and retaining investor confidence. But what do you think about this supply chain crisis? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.